My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
So now that the January FOMC meeting with the Federal Reserve is done, what's about to happen next for the crypto market will be unprecedented. So in this video, we're going to discuss what impact this will have on the altcoins you hold in your portfolio, the expectations for the next FOMC meeting, the Fed's goals for inflation, unemployment, the reason why the crypto market is recovering over the past 24 hours, some major bullish catalysts that are happening right now that we all need to be ready for this year, and what's happening with the US debt clock that I covered in my video yesterday, opening up a can of worms right here for the Simpsons predictions and how everything is all connected with this man right here, Donald Trump. Plus, we have to get into the charts like the US dollar index, what's happening right now that gives us a glimpse into what's coming next for Bitcoin's market cap dominance and how that's going to affect the total crypto market cap excluding Bitcoin. So Ethereum, XRP, Solana, SUI, XLM, and even meme coins like Fartcoin, real-world asset projects like Ondo, and everything in between. So if you guys are feeling bullish, comment 777. If you're feeling blessed, comment 777. Let's run it. All right, bull runners, welcome back to the channel. So I just want to give a massive shout out to everyone that made it out to our Altcoin Pro Connect event in Las Vegas, Nevada this last week. I can't wait to see you guys at the next event. We're going to be announcing more about that inside the community in due time. So if you haven't joined Altcoin Pro University, make sure you guys tap in with our community. That way you can maximize your upside in crypto this bull run while minimizing your downside to get started. Just click the link in the description below. It'll take you to this page right here. You can watch the 26-minute video if you want more details about what's included. We have about 1,200 members right now, and it's only $97 a month or $970 a year. We have a 30-day money-back guarantee. So worst case scenario, you'll learn something new. Best case scenario, you become our next $1 million success story, because making over $1 million in crypto is not as complicated as it might seem. You just need to surround yourself with the right people who have been there, who have done that. And on top of that, if you're interested in becoming an affiliate of Altcoin Pro University to earn passive income with us, then like this video, comment 777 below. That way we can see if it would be something that would interest you. Because if enough people are interested in sharing Altcoin Pro University to earn passive income, similar to what Amazon.com did with Amazon Associates that grew their business, then we may create the Altcoin Pro affiliate program with top-notch education for our affiliates. Those of you guys that have been following me for the past decade know that I got started with affiliate marketing and it absolutely changed my life, because it gives you extra income on the front end. That way you have more money to invest into the crypto market, because if you're not making enough with your job, there's a few skills that you can learn to change that. And marketing and sales are two of the most valuable skills that you can learn. And then trading is an amazing skill to be able to scale your income on the back end as an investor or a trader or a combination of the both. So if that sounds fair enough, that sounds cool to you, then we might give you guys that option in the near future. On top of that, make sure you fill out the application below to claim what was taken from your business. If you have a business from Visa or Mastercard, they lost a $5.5 billion settlement, guys, and the deadline cutoff is February 4th. So we have about 5 days until this ends. So timing is of the essence. We have a lot to get into in this video,
especially if you're looking to stack more crypto before the bull run is over. Did you know that Visa and Mastercard lost a $5.5 billion class action lawsuit for imposing unfair fees on merchants and business owners? So if you own a business, or if you know any business owners that process payments with Visa or Mastercard between 2004 and 2019, that's 15 years, you could actually be owed a refund of 1 to 1.5% of your total revenue from that period. That's a lot of money. For example, this business that generated 1.6 million in credit card revenue during those years is getting back $28,000. This business that generated over 7 million is getting back $93,000. And this business that generated over $20 million during those years is getting back over $320,000. That's money they didn't even know was on the table. And all they did was fill out a form through the link below this video. It literally takes less than a minute to see if you qualify, but you don't want to wait too long because the deadline to file is February 4th, 2025. So the sooner that you fill out the form below, the sooner that you can reclaim what's rightfully yours. Plus, if you don't have a business, you can actually earn 3% by referring businesses that do qualify by creating your affiliate account through the link below. So this is a no-brainer way to get money back in your pocket to use for your business, or if you want to use it for crypto or other assets to invest in, you can do that. So click the link below. Let's get you paid.
Okay, so with all that being said, let's dive right into the meat and potatoes of this video. So the FOMC meeting is the Federal Open Market Committee meeting where they discuss interest rates. And Jerome Powell, to recap, here's what he said.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-run inflation expectations well anchored.
So the Federal Reserve's dual mandate is to keep inflation low, near their 2% target, and also to keep employment high, which would mean unemployment is low. And December's data came back at 4.1%, lower than November's 4.2%, which is a great sign. So this data, coupled with the consumer price index for all urban consumers in the United States at about 2.89 from December for all items in US cities, up a little bit from December, but not that drastic enough to cause alarm here. This is what's caused the crypto market to bounce over the past 24 hours, because several meetings ago, Jerome Powell said that they were watching the unemployment rate and they wanted to keep it below, I think it was 4.4%. And so if we saw higher unemployment than November at 4.2, and let's say we went to 4.3, 4.4, then that would be grounds for concern, but we went down. So when we zoom out here on Max on the official Fed website, we can see what happens when unemployment spikes, and this leads to recessions. As you can see right here, the most recent in the past was COVID, when unemployment went from like 3.5%, spiked all the way up to the highest in history when they closed down the entire country. Before then was 2008 until 2009, and this gray box you guys can see is when a recession has been marked in. And so every single time, 100% of the time, this is not 50-50, this is not 75%, this is 100% of the time, unemployment has spiked rapidly. We've seen a recession follow. And so the one before then was 2001 during the dot-com bubble boom. The time before then was 1990 to 1991. Then time before then, 1981. This goes all the way back until the 1940s. So we have over 70 to 80 years of data here. So this is not, a year or two. We're talking about back to the 50s. So this is why it's super important for us to keep a close eye on unemployment this year, because this is going to be a telltale sign of when the stock market, when the crypto market, when the real estate market will see the next major pullback. Because there are a lot of people out there screaming from the top of their lungs that we are going into a super cycle. But if 100% of the time that unemployment has spiked, we have gone into a recession, well, what will that look like for the crypto market, and where are the odds? Because anyone can have an opinion, but if their opinion is not grounded in facts, in data, then you have to be very careful who you listen to. So I listen to the charts and the data, and that's what we're going to talk about today. The Fed Watch tool right here, CME Group, says for the next meeting, March, 82% are expecting the Fed to keep rates current.
If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate.
So this is leading a lot of investors to believe that the Fed is going to keep rates where they're at for another couple meetings. For example, March, 82% are expecting current to keep it right at where it's at right now. And what that would look like is no change in interest rates, or a flat blue line right here on the federal funds rate chart. And so because they've been dropping rates since August of 2024 from 5.33 down to, the data hasn't come in yet for January, but it's going to be the exact same as December. So we start going sideways. Now, this has happened before. Over the last 10 years, if we go back to the last time the Fed went from raising rates to pausing rates to cutting rates, we saw July of 2019 from 2.4 all the way down to November of 2019 to 1.55. And then the Fed went sideways from November of 2019 until February of 2020. So for 3 months, they kept the rates at about 1.55%, and then it went up a little bit to 1.58. But then right when the recession was marked in, the Fed rapidly dropped rates from 1.58 all the way down to 0.05. This was drastic. So when Jerome Powell says,
our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
What that means is if we see any rapid changes in inflation or unemployment spiking up, then the Fed responds in reaction by adjusting interest rates. And so this would mean them lowering rates if something were to break. Now, something definitely broke in February 2020, leading into March when the pandemic hit. So they rapidly dropped rates in response to it. So if we zoom out even more and we go back to 2008, you can see the Fed rose rates all the way into 2006, paused rates from July of 2006 until July of 2007, then started dropping rates. And when the recession hit, they rapidly cut even more, all the way down to virtually nothing. The time before then, we saw the same thing. We saw them raise rates into June of 2000, keep them paused and relatively steady until November 2000, and then start dropping in December. And the recession came in after they started dropping rates. And they continue to drop rates during the recession down to virtually nothing. So will we see history repeat itself? Because right now, the Fed went from raising rates until August of 2023 to pausing rates until August of 2024 for a year. And now that they just started cutting rates, will there be a recession? But a more important question to ask is not, will there be a recession? The most important is, when will there be a recession? And how much longer do we have until it happens? And what can you do to prepare? Because if the past 1, 2, 3, 4 major times that the Fed dropped interest rates, we've seen a recession, and multiple times even before then, going all the way back to the 1950s, since 1957, we've seen a recession following the Fed cutting rates, on top of unemployment spiking up as well too, leading us into a recession. Then this is extremely important to pay attention to, because we've seen unemployment raise from April 2023 from 3.4%, and my expectations are for it to continue to rise, but I still think there's money to be made in the crypto market until the top is in, and I'm going to explain that in this video. So we're going to dive into the charts, but first, before we do, there's some massive bullish news happening right now that we need to cover. For example, the Czech Republic, their central bank just approved the Bitcoin purchase proposal. Also, Donald Trump has been signing executive orders, this one specifically to make America the crypto capital of the world. Check this out.
And this, David, is?
Crypto. Yeah, this is the crypto EO. We're going to be forming an internal working group to make America the world capital in crypto under your leadership.
Which is really going up, right?
Absolutely.
You find them exciting? They might not be exciting, but we're going to make a lot of money for the country. And so is David. You have to check him out. There's nobody like this guy. They said, how did you get David Sachs? How did you do that? And he's doing it for the country more than anything else. So we appreciate it, David. Thank you very much.
Now, for those of you guys that don't know, that guy right there with Trump, David Sachs, he's a co-host for the All In podcast alongside Chamath Palihapitiya and some other major power players and investors that are extremely bullish on crypto. He was the COO and product leader at PayPal, and he's an early angel investor in Airbnb, Facebook, Uber, SpaceX. And in December of last month, he became the AI and crypto czar for the incoming administration. So this is some of the most bullish news happening right now. And on top of that, the future of finance will be on distributed ledger technology. And we're going to discuss what that means and how that's going to affect specific cryptocurrencies by the end of this video that I'm going to share with you guys that I'm extremely bullish on. So standards are already set in place for all of finance to begin using blockchain at scale. The ISO TC68, which is the financial services standard, the ISO 222, which is the financial data standard, and the ISO TC 307, which is the blockchain distributed ledger technology standard. Now, you don't need to understand what that means to make money. You just need to know that these three are the core ISO standards across 60 plus nations for mass standard adoption of blockchain in finance, with how banks communicate with each other, with how the SWIFT system operates to send transfers across seas that take 3 to 5 business days. All of that is being overhauled and improved. And while ISO 222 is a legacy financial messaging standard, it means these networks or assets could be used for ISO 222 messaging, and the standards that would enable it would be thanks to ISO TC 307. ISO TC 68 is the body for all things around financial services, everything from financial data, fintech, AI, digital currencies, and more. But of course, those standards would be nothing without cooperative efforts from all parties. For example, these companies. We have Visa, Mastercard, Mojaloop, IBM, Hong Kong Monetary Authority, Bank of Japan. Lots of these companies Ripple is partnered with. Bank of Canada, FedNow Instant Payments, Banque de France, the Bank for International Settlements, which is the central bank of central banks, the World Bank, the IMF, SWIFT, virtually all the top major companies and major players around the globe, guys. This is the biggest deal in human history in finance. So it's important to pay attention to this because this is going to directly affect your ability to live and have freedom as a human being on this planet the rest of your life, because as human beings, we're the only species that has to pay money to live here. So pay attention to this because we're going to help you make some money here. Because the distributed ledger technology ecosystems, companies, platforms, and blockchains that we have discussed over the past few years have also been built to align with this specific standard framework of messaging. For example, XRP, Ripple is the member of ISO 222 RMG. HBAR is going to be compatible. Quant, XDC, IOTA, and a few others as well too. And when you stack facts like this on top of major conspiracy theories that give us a glimpse into how God works through the universe and the financial system, it is just too synchronistic to ignore. I don't believe in coincidences. I believe in divine orchestration through God, and that just starts to play out through the facts that we've covered over the past few years to prove it to you. So we're going to get into more facts. One of the main things that we need to look at here is the USDebtClock.org. Posted all in U.S. wealth discovery right here with U.S. national debt with a zero with a cross through it for $36 trillion. Also, it's showtime for The Simpsons season 33. They posted this back in 2021 right here. Well, we can see that episode equals Y2K, countdown to Y2K right here. It shows zero, the US dollar. Also as well too on the left-hand side of the screen shows zero right here, showing the dollar inevitably going to zero. And one of the wealthiest minds of all time, Warren Buffett's best friend and business partner, Charlie Munger, said the safest assumption is that the dollar is going to zero over time. He's a billionaire. Who do you listen to? Billionaires. So, The Simpsons also shows right here in the upper right-hand corner, two planes colliding. Now, could that be symbolizing what just happened recently in the news with American Airlines crash with military Black Hawk towards runway 33, and The Simpsons episode was episode 33?
Very breaking news, all coming in very quickly. Lots of stuff unverified at this point, so we have to be very careful. But reports I'm getting from people in the industry are telling me that this was a commuter airline flight from Wichita to DCA. That appears to be the case, at least from what we are hearing, again, preliminarily. I don't want to name the airline or the flight number. And again, these regionals have the flag carrier. In other words, many of them fly for a major U.S. airline.
So the aircraft landed in the Potomac River after the crash. Trump posts, "Watch the water," the same day as the plane crash. On Truth Social, right here on The Simpsons, it shows a dead computer in the upper left. AT&T has a network outage in 23 states showing SOS on the cellular network. There appears to be a robot attack and buildings exploding in the lower right. The episode is a stage and it appears to be leading towards a credit roll. So what is going on here? Well, as we know, the whole world is a stage. We're all part of a divine matrix, and when you can decode things, then that can give you a glimpse on what's going to happen next for major financial markets. For example, look at the US dollar index. Well, we've been in this bullish channel since 2008, where the DXY goes up in comparison to a basket of about 6 other countries' currencies, and it goes down. And so we've been fluctuating between this ascending resistance right here and this ascending support. So since 2017, we've printed in a higher high on the monthly candles, and then on the MACD, we put in a lower high right here, and we saw a bearish cross come in after the pullback from the 1st of September until the 1st of February. So right now, on the macro, the DXY is forming a bearish divergence. Now, what a bearish divergence means is you see a higher high on a price chart, you see a lower high on a key indicator, and the key indicator could be the MACD, relative strength index, stochastic RSI. So in this case, we're looking at the MACD. And what this means is that buying pressure is waning, it's weakening, signaling a potential reversal to the downside. Now, the longer the time frame, the stronger the signal. And what that means is the time frame is the candles. For example, if we're on a monthly time frame, that is a longer time frame. If we're on a daily time frame, that's a shorter time frame. If we're on an hourly or minute, it's even shorter. So the more that we zoom out, the stronger the signal on the chart. So we can see bearish divergences at times on the monthly, on the weekly, on the daily, and this MACD is going to look different on each time frame. So because we're on the monthly, we are on a macro time frame, which is one of the strongest signals we could see if we're seeing a bearish divergence right now. So what that means is bullish momentum for the dollar is waning, it's weakening to lead us to an inevitable bear market correction. And that goes in line perfectly with Charlie Munger saying the safest assumption is that the dollar is going to go to zero over time. And so this would lead us to some massive collapse and crash of the dollar at some point in the near future. Now, timing that is tough, but this gives us a glimpse into what is coming next for the crypto market. For example, Bitcoin's market cap dominance basically shows us, when the Bitcoin bull run is in full effect and when alt season starts. And when alt season starts is when Bitcoin's dominance drops. But that doesn't necessarily mean that Bitcoin does bad, which I'll explain in a little bit. It just means that altcoins outperform Bitcoin when this drops. So we've been in this bullish channel for, June of 2023. We've been in a Bitcoin bull run with Bitcoin's dominance rising since the 5th of September 2022. But what we can see here on Bitcoin's dominance price chart is us making higher highs since the 3rd of July of 2023 to the most recent peak at 61 something percent right up here. And the key indicator on the weekly, which is a macro time frame, has been seen, which is the MACD, a lower high since the 3rd of July to the middle of November. And so this is another bearish divergence. So this is giving us a glimpse into what's about to come next for Bitcoin's dominance, which essentially would mean Bitcoin's dominance over time will see a trend reversal where we would put in a lower high than we saw, a lower low than we saw right here on the 2nd of December. Now, what I think this is going to look like, if we just draw a support right here, is very similar to what we saw happen all the way back here from the 1st of February 2021 until we fell off a shelf by the 29th of March of 2021. Bitcoin's dominance fluctuated between roughly 59% to 65%. And when it fell off of a shelf, which I'm going to show you on the chart, that signaled the bat signal, or the bull signal in this case, for altcoins to go parabolic. So looking at these three charts right here at the top, we can see Bitcoin's market cap dominance. In the middle, we can see the Bitcoin to the US dollar price chart. And at the bottom, we can see the crypto total market cap excluding Bitcoin, which is every single altcoin. Now, at the top, we can see when Bitcoin's dominance fell off a shelf was on the 29th of March. Well, at that point, Bitcoin was all the way up here, virtually at the top. And prior to that, when Bitcoin's dominance fluctuated, like I just showed you, since the 1st of February until it fell off a shelf in March, between, roughly like 50% to 65% going sideways. Well, Bitcoin bounced from $29,000 to over $50,000 while it cooled off sideways. And so my expectation is for when Bitcoin's dominance starts to roll around, it's not just going to go down automatically every single week. We're going to see periods of bearish price action followed by bullish price action, bearish price action, bullish price action until that breakdown occurs. And I think that major breakdown is going to take a while, and we're going to see Bitcoin fluctuate, forming potentially lower highs on the dominance price chart while Bitcoin continuously does well because of what just happened with Trump signing the executive order to stockpile Bitcoin. So I think Bitcoin will still do well, but what this means for the altcoin market is when the dominance starts to break, I think sometime later this year, then we're going to see a parabolic blow off top for altcoins in the last 1 to 3 months of the bull run. And the reason why I believe this is because if we pair these three charts up right here, well, Bitcoin had pretty much already peaked out at that point while the dominance had gone sideways for about 60 days while Bitcoin's price went from 30 to 50 plus K. Also, simultaneously, the altcoin market went from about $350 billion until Bitcoin's dominance dropped. It was at $700 billion. So A rising tide lifts all ships, and Bitcoin's dominance going sideways led to a lot of liquidity to flow into both Bitcoin and the altcoin market. Whereas when Bitcoin's dominance dropped rapidly, we can see there wasn't much more appreciation in Bitcoin in the short term, maybe an extra $10,000, but there was massive appreciation in the altcoin market going from 650 billion upwards of $1.5 trillion. And that happened fast. As you can see at the bottom of the screen, when Bitcoin's dominance started to fall off of a shelf was after the 29th of March, so going into April, and the altcoin market went from $650 billion upwards of $1.5 trillion in 42 days. So between 1 to 2 months was the final blow off for the altcoin market. And then Bitcoin's dominance at the top of the screen, I'll just circle where I'm looking at right here, by the 10th of May until the 17th of May, bounced from 39% after decreasing rapidly upwards of 49%. During this bounce right here, we saw a massive correction happen for both Bitcoin. Bitcoin sold off a lot, and also the altcoin market sold off a lot too. But this just simply means when Bitcoin's dominance bounced at that point, but yet Bitcoin's price went down, well, it just means that Bitcoin outperformed altcoins and sold off less during that correction. So when we see Bitcoin's dominance drop rapidly, it makes the most sense to be in altcoins. And when we see Bitcoin's dominance go up after that drop, it makes the most sense to be in stablecoins, number one, but Bitcoin rather than altcoins, because Bitcoin will bleed out less during that correction. For example, we see Bitcoin drop right here to about $30,000, which was minus 49%. That's why I say stablecoins first during that next correction, because you don't want to lose 50% of your portfolio buying the top when hedging profits is the smartest move into stablecoins. But also at the bottom of the screen, the last thing you want to do is see your altcoin portfolio drop much more than that. In this case, it was like 59, 60%. So losing an extra 10% if you held altcoins, because altcoins are more volatile than Bitcoin during corrections. So this leads me to believe that we still have some time before Bitcoin's dominance breaks down, because currently we have rallied since the 2nd of December from about 54% upwards of 59%. But I do think the tides are starting to turn because of this macro bearish divergence. So eventually, in my opinion, I think the MACD, even if we see a bullish cross and do something like this, I think it's just going to continuously trend further down until we finally see the dominance break to the downside below 55%. And I think that would be roughly the last 1 to 3 months of the bull run later this year around September to November. But until then, I think as Bitcoin's dominance goes sideways between 55% to 60%, while the Federal Reserve keeps interest rates relatively steady, unemployment stays below their 4.4% target, this will lead to a massive face-melting altcoin rally, a Bitcoin rally as well too, and a rally for projects like XRP. Because if we look at where we were during that 2017 bull run, well, XRP rallied up to the previous high of 2013, and then we saw a consolidation period and a sell-off before another major breakout past the all-time high, a longer consolidation period, and then a blow-off top before the bear market kicked in. So where we are right now, well, we rallied up close to the all-time high. We saw this little consolidation period, and currently we're cooled off below the all-time high right now, similar to what we saw happen back here before the next major breakout. So in my opinion, I think XRP is going higher. I think it's going to pass its all-time high with the rest of the altcoin market. And the reason why is because massive institutions are prepping for an XRP ETF. We saw Grayscale just file for an XRP ETF on the New York Stock Exchange. So why would they file for this if they didn't have plans of marketing that ETF to wealthier clients to accumulate XRP through their ETF? So it's just a domino effect, guys. There's been multiple XRP ETFs filed, so we're just waiting for the SEC to approve them. It's just a matter of which one gets approved first next. Will it be Solana, XRP, or maybe like Chainlink or something else? You guys can let me know your thoughts in the comments below. Which one do you think will get approved first? Because it's only a matter of time, in my opinion. And also, this just in, ECB President Christine Lagarde says she is confident the European Union will not hold Bitcoin as reserves. And she's previously praised Ripple. Listen to this.
On this matter that you referred to, and whether reserves of central bank should or could include Bitcoins, I think there is a view around the table of the Governing Council, and most likely the General Council as well, that reserves have to be liquid, that reserves have to be secure, that they have to be safe, that they should not be plagued by the suspicion of money laundering or other criminal activities. And as a result, I'm confident that reserves will not enter, that bitcoins will not enter the reserves of any of the central banks of the General Council. I had a good conversation with my colleague from the Czech Republic, and I leave it to him to make whatever announcement he wants to make, but I'm confident that he's convinced, as we all are, of the necessity to have liquid, secure, and safe reserves.
Now, what are your guys' thoughts on that? Because either way, whatever they say, we just have to look at the charts. For example, I covered this in my previous video, and I talked about what's happening on the weekly RSI for Total 2, which is the crypto total market cap excluding Bitcoin. Well, we can see when the RSI was in this bull run alongside the crypto bull run, we peaked out all the way up here at about 95 while the altcoin market was breaking up to the all-time high. And we saw another bearish divergence happen where we saw higher highs on the price chart right here between that first peak in May of 2021 to the all-time high for the altcoin market by November. The price chart was showing a higher high for the market cap of the whole industry, whereas the relative strength index dropped from like 95 right here to 71 on the relative strength index on the weekly. So massive bearish divergence. And then after that, bear market was in. We saw lower highs on the relative strength index and then also lower highs on the market cap chart to then move in alignment with the RSI, where lower high, whereas the divergence during a bull run is one of the major leading indicators of a coming bear market. So what are we seeing right now? Well, we are seeing Total 2 right now at $1.43 trillion, hovering just right below the all-time high. So we're not really in a parabolic euphoria stage right now, even though we have seen massive bullish momentum since the bear market bottom. The relative strength index is at 60 right now, pulling back from 77. We're not in drastic overbought conditions like 80 to 95 here. And if we look back to the last bull run, what happened here on how we saw a bounce from these levels that we're currently at right now, around 60 on the relative strength index, that's when we saw the major move on the left-hand side of the screen right here take place for the altcoin market past the all-time high. We went on this face-melting altcoin bull run. So will we see a bounce for the RSI from 60 up into drastic overbought territory, just like we saw happen back here from September 2020 until February 2021, pushing the relative strength index up to 85, 90, 95, or even higher, closer to 100, while the altcoin market breaks out and forms the next major move to the upside, somewhere between $2 to $3 trillion, and then a major correction, leading us to an inevitable bearish divergence on the macro as the altcoin market forms a parabolic blow off top, and then we go into the bear market cycle. Will it look something like this on the price chart? Well, only time will tell. And I believe we are on the verge of a massive move. So before that move takes place, the most important thing that you can do is get access to capital to have in the crypto market of what you can afford to lose, of course. Not selling your house, not selling your car. There are strategic ways that you guys can get funding. For example, we have an option in the description below this video so you can unlock funding for your venture, whether that be a new or existing business, real estate portfolio, crypto portfolio, or other passive income opportunities that you have that are lucrative for you to make more money. When you click the link in the description below, you can get access to funding with as low as 0% interest, no collateral required. You just put in the amount of funding you want to obtain, select I own a business or I want to start a business. Even if you don't want to start a business and you want to grow your crypto portfolio, you can select I want to start a business, and then what is your monthly income or business revenue? Put that in there. And applying will not impact your credit score. Responses from the team will be in less than 24 hours. And it's imperative and it's very important that you start this process right now because the bull run is in this consolidation phase right now. And when these breakouts happen, they happen very, very quick, and you do not want to be chasing pumps. For example, our research team posted GOAT on the 13th of October of 2024 when it was right at a penny, and since then it rallied to over $1 and is currently still up over 5,000%. That's like turning $1,000 into over $50,000. Our team called Pendle at only a $16 million market cap, or 16 cents, back on February 18th of 2023, all the way back here, and since then it's rallied up over 4,000%. That's a 40x. It's like turning $1,000 into over $40,000. Our team also called BitTensor Tau September 15th, 2022, before the token was ever even launched. And since then, Tau has rallied over 2,000%. That's a 20x. Our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. And the bull run is just getting started. The list goes on and on and on. Our team called SUI, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below. Get in right now. Watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree, if that's a goal of yours. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.